The bloodbath continuing in gold this Monday. Joining me on the line now is Frank Holmes of U.S. Global Investors. Frank, thanks for being with me.
Well, it's good to see you.
Frank, how are you surviving?
Well, it's really challenging times for the past while. Fortunately, our funds have had higher cash levels, and we've trimmed a lot of the juniors. And last year, I'm concerned if the junior capital market is going to be broken for maybe another 18 months. So we're weathering that. But the biggest thing we've always advocated to investors is to have a balanced view, that you have a 5% in gold bullion and you also have a 5% in gold equities, and you rebalance each year.
Frank, I know in the past we've spoken about your famous catchphrase, the love trade in gold, but my question to you is, Frank, where is the love trade now?
And right now there's not much love, and that's because of what's taken place in China. China's GDP slowed down more than people thought this past quarter, and GDP income per person is slowing down, and that's a direct relationship to what's taken place in Europe, because China sells more products to Europe than they do to America. So the European contagion is impacting China, which is then coming back, will have an impact here. But this will set it up that you're going to see gold as a fantastic buy, as Mark Faber has commented, that it's about time we've had a big correction in the price of gold.
So is it a buying time? Is it a selling time, Frank? What do you do when gold is dropping $100 an ounce as we speak?
Well, some of the best things to do is to try to be as objective as possible and stand back and say, what is the math of this market? And something you can do in markets you can't do in Vegas is count the cards. And you ask yourself, how often has gold fallen $80 in a day? And how often has it fallen $80 2 days in a row? And most often capitulations take place on a Monday like today. And you sit back and you say, well, let me see. Over rolling 12-month periods, gold has fallen the percentage terms less than 2% of the time. And day declines of this magnitude is less than 1% of the time. So odds favor that over the next 12 months, we will get a bounce of some magnitude. And you can see a 15% rise from these price levels.
So should we look at it like gold is on sale and it's a good buying opportunity?
Yes, and I think the big catalyst will be if there's a increased turnaround in China, what they call inventory rebuilding for their economy. And if we start to see that, then the other commodities will start to pick up in demand. Even oil's coming off today, and you saw it again on Friday, on the concern on the backdrop of China slowing down its GDP growth.
But the question remains, Frank, how low can we go?
Well, how low is a great question. Based on the math of markets, you're at an extremely oversold period, and it could be another $100 would be the worst, would be an extreme case. But then you'll get such a bounce that'll be of an unbelievable magnitude. This happened in the 70s, by the way. We had these huge percentage moves of gold prices. They were a lot lower overall, but percentage change was quite significant.
Frank, over the course of your career, have you ever seen anything like this?
Yes, I have. And at lower gold prices, I've seen big declines. I have seen it and I've witnessed it before. And that's why it's always good to have cash to be able to buy when these events take place in the market. But what's important is to take a look at how fast will China turn around to do things to stimulate their economy. That's what's really key to global growth.
Frank, based on your sources and contacts, are you seeing people get out of physical or paper gold?
Well, I believe there's a trend taking place where people are consuming silver and consuming silver coins, and also buying gold coins. That's not where there's that's more where there's a hoarding of people buying as they left the GLD. And we're seeing also people leave that as a trade going into speculating in currencies. George Soros led the way, was selling his gold to short the yen. But you take a look at yen and gold terms, and it's been healthy to have gold in Japan. That decline has been next to nothing. In fact, earlier in the year it was up substantially. So I think that people are playing these currencies, and we'll see how it unravels. But what's really important to the listeners, because so many people in North America are consumed with the fear trade. And the fear trade is basically negative real interest rates are going to stay. ISM numbers were lower here, so immediately the long-term bond, 10-year and the 5-year bond market, they fell below the inflationary rate. They'll continue to print money in Europe. They're going to continue to print money here. And Japan is doing everything to try to get inflation to 2%. So from the fear trade position, gold is just prudent to have in your portfolio. Now, if interest rates were to jump 2% above inflation of 2%, say to 4%, then gold wouldn't be attractive in the fear trade as a money. So right now, that's positive.
Frank, are you saying that a devaluation of the US dollar is inevitable and that will eventually help gold?
Well, it's interesting you say that, because one of the big factors of the concern that took place in Cyprus was the bureaucrats of Brussels confiscating someone's assets. And you have what's been estimated, I've heard, up to $1 trillion just looking for safe harbors where rule of law is better. So they're looking at America. So a lot of money's come here, but it's stale money. It's not going into growth. And what money is going into is going to dividend-paying stocks, which are increasing their dividends and buying back their stock. That's where you see money flowing into, or it's going to Dubai, it's going to Singapore, it's going to Switzerland, where they feel that there's safety of principle, but it's not taking the risks of investing. So if you have $1 trillion of sort of quiet money doing nothing but just trying to protect itself, that can impact global growth.
Frank, I know you're a fan of gold. Today as we speak, are you still bullish?
Yes. It's just prudent, like having car insurance or house insurance. You want to make sure you always have it.
Frank, I'm sure your calmness will help soothe a lot of investors out there. Thank you so much for being with me today.
Thank you.
And thanks for watching this special breaking news coverage on Kitco News. You can email me any comments or questions at newsfeedback@kitco.com or follow this conversation at Daniela Cambone. Thanks for watching.